Good morning, Chris. How you doing?
Hey, good morning. Long time no speak, man.
I know, like I was sick, and then you had COVID, and so missed a couple weeks, but we're back. You're
Yeah,
feeling better?
COVID took one look at my beard and immigrated. It was like, your beard's not as cool as Brian Jones, man. Get out of here.
Oh, well, I think I don't know. I was thinking about shaving my beard a little, but we had this cold snap in Kentucky, and then I was like, well, I'm gonna wait till it's officially summer and then shave it because I can't. My face will be so cold if it just suddenly dropped.
Your poor chin, man. Your poor chin. You got to keep your chin warm. That's the thing. This is the only thing that separates us from just not looking old. I
Well,
like it.
in the
This
summer,
tells me about my trades. This is my trading style. The gray. This is when you've oversized positions.
every little patch is like a trading error and a worry. Yeah.
Yeah, absolutely, man. It's good to see you, man.
You too. So looks like we've had a little bit of a rebound rally. It's starting to things are picking up a little bit, maybe.
Yeah, it's been an interesting couple weeks. The thing is, in this kind of market, you've just got to be careful about how fast we move away from the mean. That's definitely the theme. Every time we get extended, we had that big pullback a couple of days ago.
Mhm.
We literally pulled back from +3 ATR from the mean on the daily right down to -3 ATR in like 8 hours. It's pretty hard when you see that, and that can be devastating for a lot of people because you tend to drive this transactional bias, right? You tend to, oh, everything's going to stay the same, everything's going to be hard, really cool, let's go long, and they get trapped in it. And if you're not watching the charts the right way, if you're not recognizing the signs, you can easily get trapped in short duration, debit trades, like a long call option, and then those just get killed whenever things pull back. So recognizing the circumstances that cause a pullback, waiting, being patient, all of those things are key, especially in this kind of market. But I think we could be up at new all-time highs at some point. There's no stopping the bulls once they get their act together. It's surprising. You've got all this negative news in the market, but yet the market continues to move up. So news is not driving the direction at the moment. So it's good. It's a good time to be trading. I mean, we've had a really good run. I missed the numbers. I think I'm on 29 straight winners in the one side, and I think 17 on the other. Last month we had
like 17, and the quick hits, yeah, 26 or 27 winners in a row.
And then last month we had an 80% win rate. In 1 week we were up 90% win rate. One of our small accounts made 30% return for the month. So there are opportunities. I think you've just got to be really, really sensitive about the strategies you use, the tools you're using, and just remain calm. Don't overcommit. As soon as you overcommit, you're setting yourself up to lose. So yeah, it's a good time. Not bad.
Yeah. And that's probably my biggest demon is occasionally I feel it's always the one I feel really certain on that I size up on, and that's when it gets crushed. Or
I'll show you a couple of things.
or there's like the positions will creep up on you.
Yeah.
You're like, oh, I'm only going to do this many positions, and you're like, well, that's a good trade, and this one doesn't close out as quickly as you thought, and then suddenly you have way too many things on your book.
Well, let me show you a trick, because
Okay.
this is something most people don't do, and it certainly helps me stay calm and not oversized. But you take this graph, for example, right? This is TXG. This is a trade that we've been in for a while. You can see the volatility band shifted color up here, right? This was back in November, crossed over the 21, and then it just failed, right? That didn't stop our indicators giving us bullish signals, right? So we had this cluster of bullish signals here. You can't take them. And this is the secret. You never trade counter to the volatility band, right? So this is a bit of math that I put together, looking at volatility on different indications and creating a range of price. Different ways to calculate it. I've got my own, works for me. So here's this cluster, right? You can't take a bullish trade in a red trend, right? So if this is gray and this is a bullish trade, no can do, right? You have to wait for two closes confirmed above the 21 and a change in the volatility band like you have here, right? So if we just open this up a little bit, look what happened. You get this cluster of signals, all right, corresponding here with the squeeze momentum to the upside, right? Momentum to the upside. Now, if you were an aggressive trader and you look down, if you just draw a line down here, you'll notice there's this little green dot that sits there on our stochastic. That little green dot indicated a major buy signal, right? A major buy signal at the bottom of a declining trend. No one would get that trade. No one would take it. I don't have any clients or subscribers that would take it, because you can't take a bullish trade in a bearish pattern. However, look what happened a couple of days later. You see how it hit the 21, failed the 21, drifted along the 21, and closed above the 21 there. Right? This is actually the entry. So all of these signals remain valid because there's no exit signal. So rather than sizing up too early, if you had bought long options here, you did. If you bought long options here, you did. You don't buy them here, right? You don't buy them in a red trend. Always buy them when the trend shifts color. You get your two closes above the 21. Now look what happened. We did this trade. We were up 200% on this entry, right? So this is why you can size up when the conditions are met. So you've got your volatility band has changed color, two closes above the 21, squeezes fired to the upside, or there was compression forming, momentum to the upside, volume, the change in volume during the squeeze had actually started to become neutral or positive, and our stochastic has improved from oversold to neutral. So it was getting better. The conditions were improving. That's how we know prices are going to move. Now we're in this trade. I think this one is up. Oh no, there's another one. I'll show you that one as well. But here you've now got confirmation of your below chart indicators to the upside. And you now have your on chart indicators confirming an entry as well. So now you've got multiple buy signals here. This column, the green line, the cross above the 21, the squeeze, the volume, and look at your stochastic. So if you've got tools that can be slightly predictive, now not every bottom oscillator is predictive. Not every tool is effective at the bottom. But look at this, our squeeze signal, the one that we've got here. Now notice carefully, that exit signal here was for these trades, right? You would have traded those, you got out there. That was no win, right? All of these trades, there's no exit signal at any point. So if you'd been accumulating shares, accumulate, you're operating off a 72% win rate with a 4 profit factor. So this, if you're going to trade a bullish trade in a bearish trend, you should buy shares, not options, because you're not going to get killed with the theta. But look at the signal. This is what you're trading. 73% win rate, you would not ignore that. You can't ignore that kind of signal. So this one's up 200%.
Is that 73% off of the squeeze, or is it off of the moving average?
No. This is off the squeeze tool. If we look at it from the moving averages, the moving averages only have a 47% win rate when it triggers. So you want to look for, I mean, a lot of people get fixated on win rates. Don't be fooled by it. There are trades where you can take a 30% win rate and still make a ton of money. All it tells you is whether or not you should be sizing up or sizing down, or choosing strategy A versus strategy B. A win rate is not necessarily the be all and end all of things. All it tells you is how to trade it. What's more important here is this amplitude. So the profit factor indicates the potential for a big move. If you've got a number greater than 1.2, the possibility of a big move is there. So if I know there's a high win rate and the possibility of a big move, I'm going to do maybe 4 or 5 strategies on that stock. I'm not going to do just a long call. I might do a long call, a call debit spread, a butterfly, put credit spread, finance the whole thing with some credit spreads, and then land up using no money whatsoever to trade it. The whole idea is you want to make sure that you've got as much confluence in these signals as you go down in a column, right? So look over here, double red environment, red stochastic, low volume, and you've got the squeeze, the momentum still to the downside. It would be hard to justify a bullish trade there. Now you see it getting better. You can see the stochastic moving up towards the 0. It's getting better. It's getting better. It hits the 21, crosses above the 21. Look how much different the situation looks now. Green, 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 starting to get better. It's no longer double red. It's now going towards neutral. That's when you start to trade, because things are getting less bad. That's the most important thing. Trade big when things are getting better. Don't trade big once this gets up here. You know, most guys will get, oh, I don't want to trade here. It's too, you know, look at that down pattern. Look at that down pattern. And they miss this. They missed the big move. The big move was from here to here. That's already 200%. We're risk-free already. Now from here, this is going to go where? There's no resistance that sits in between here. The next level is there. Most retail traders will pick this up once it gets into this zone where the big moves already happen. So if you have a problem with oversizing, your rule sets for entry should dictate the size of the position that you're going to do. If you had all 5 of these conditions met, size it up. Do 3 contracts rather than 1. If you only had 4 out of the 5, do 3. If you had 2 out of the 5, you might do 1 and then see if it evolves. And that's how you can safely trade with options. Too many people jump in too quickly at the beginning of a trade and oversize the beginning. And then it doesn't work, like here, you know, it doesn't work. You bought long calls because you got a signal. Yeah, but you were in a red band under the 21. You can't really go bullish until it passes the 21. So that's just one way to avoid letting the greed demon that sits on the right-hand side get into your head and say, oh, Brian, you know, best you buy 20 contracts.
Yeah, I don't do that. I mean, I just occasionally, like every time, I've kind of learned my lesson. So like I can be doing really, really well. And then every time without fail, the time that I'm absolutely certain that this is going to be great and I size up a little bit, then.
Well, yeah, just use the tools to help you. I know you've got them, but you know, try and use them in a way that allows you. And this is something else that helps me. When I analyze an opportunity, I'm always comparing apples with apples. So I don't change the setups based on the stock that I'm using. I use the same setup every single time. So if I've got 10 stocks that I'm looking at, I look at all 10 the same way. Is the squeeze setup that I've built on my tool operating with a signal on stock A and stock B, or just on stock A? Okay, just stock A. Trade it that way. I can go in here and I can manipulate the setup to make it look much better. But then I'm not comparing apples with apples. I'm comparing an adjusted apple with an adjusted apricot. You know, it's not going to make any sense. It's not going to work. So when you've got your watch list, so here you can see our watch list on the right-hand side. All I do is I just click the chart and I can see, all right, is this a trade worth doing? It's a green volatility band. We've got a orange candle that's going to open. So a divergent high will open. So we have to be a little patient. Selling volume, stochastic bouncing off the 0, squeeze. There's a low compression squeeze forming. So this could turn to the upside. Where's my trigger going to be? Well, I need to be careful. I just want to see it get above 23.77. If it can get above that line, which is the top of the volatility range, and this is reset every day, right? So the math behind this is I'm going to recreate that range every single day when a new candle is formed. That's why you see it dropping down or coming up. From there, and I extract the range pricing from different time frames. I'm not using the same time frame as the chart. I'm using different time frames. So what is the average volatility of price on a 5-minute chart? Okay, it's this. I can then apply that range to a 30-minute chart for a trigger. And that makes my system a lot more effective than just looking at one time frame. So from here, I would be saying, okay, well, if there's a trade to be done, it's going to be here if I'm going to go bullish. And I'll probably look to do something once I've got this going green and that firing back up to the upside. So I'm going to hold this there. We've got one trade already here. We've got a long call option in already on Hertz. And then I use the multiple time frames down here. So this is the daily using the stochastic only. This is the hourly chart. And what I look for on the hourly chart is the gap range between these green, red, and blue lines, the 21 and price, because this gives me the entry triggers for intraday put spreads. So those 27 winners in a row that you saw us have, that comes from this. So I'm looking for income every week. I can't get that income sometimes from just doing SPY or just doing the Qs. I have to find other opportunities to help pay the bills, right? So this is a tool that I built to help me do that. And then I use the 30-minute as well, just to get validation. So here you can see 30 minutes triggering long. We're at the top of a volatility range. I can sell put spreads down at this level. On the hourly, I've also got a long, and I've got, there are my levels I can sell. There's a trade right there in the blue box. So there's always ways you can trade, but you've got to know where you're looking first. Most people don't even have a watch list. They sit in a chat group and someone says, hey, I'm trading Tesla. And then they go to Tesla and they just throw on the first thing that they think about and get surprised when things go against them. And that's the worst way to trade. I mean, I'm not a big fan of, multiple, chat groups. If you're in a chat group that's giving you stock tips, then that's not a very useful thing. If you're in a chat group that's teaching you how to trade, totally different. Totally different. And I think that, as a beginner, if you're out there listening to this, be very, very careful about sitting in too many groups where you don't know the people that are sitting on the other side, because they could be throwing ideas at you that are not for you. And you might assume they are because you're in a group with them, but those ones often come back and bite you the hardest. So just be careful. Trading is more a matter of process, planning, execution, and then get on with your life. Not sitting in front of the screen listening to 27 people talk differently on a Discord server. That's not healthy for anyone.
That sounds maddening.
The thing is, too many people want to outsource accountability for their trading. So if you outsource the accountability, you don't learn anything. All right. You want to be able to say, oh, if I made money, it's because I'm good as a trader. But if I lose, it's that guy's fault because he gave me a crappy trade. In trading, there's no such thing as someone else told you to do something. You are always in charge of whether you hit the keys or not. If you don't know why you are hitting the keys or why you are doing the trade or what to expect in that trade, then you are on borrowed time. It's a matter of time before that process that you have is going to expose yourself. You're going to be exposed and you're going to lose money. So usually with what I try and teach is understand the techniques that you're using, understand the setups that you're going to use those techniques in, plan, execute, get on with your life. Don't sit around watching screens all day if that's not part of your plan. If your management plan is manage it on the 1 minute chart and you want to scalp, fantastic, but make sure that your scalping technique works. So don't try and apply a 17-day put spread management strategy into a scalping technique that you use on a 1 minute candle. You're going to lose money. And when you lose money, you're going to turn around and say, oh, I'm a crappy trader, blah, blah, blah. And then you develop this self-belief that you're bad. And quite honestly, you will trade to your level of self-belief. If you believe you're bad, you're going to trade bad. And that's something that is so common amongst traders. You'll often find, really unhelpful things in public forums. Like I hang around in some of these public forums just to see what people say. And I'm often amazed at just how much damaging comments are made and just bad advice, man. Like just people, I don't know where they're coming up with this stuff, but not helpful at all. And, there's so many ways to win this game. There's, how many strategies of options, right? I mean, I have some people who love doing iron condors. I cannot do iron condors. I'm just not a fan. I'm really not a fan of them. They can be quite complex to manage. I just don't do them. Doesn't mean they don't work. I'm sure they work for other people. I've just, I trade what works for me. And I think that's the most important thing you can do as a trader is trade what works for you, not trade what works for someone else. Take the tools that someone's built that work and then modify them to fit you. Don't just try and copy someone else. That's not a good idea. Anyway, ranty, this is COVID. It takes over your brain and you start, ranting.
You're allowed to rant. That's what this is for. So I'm just curious, if you were going to do an iron condor, what would you look for on this type of a chart?
I certainly wouldn't look for a green volatility band because green volatility bands indicate price movements to the upside. So what kills you on a condor is not, you have to be range bound. right? So if you're going to do a Condor, you're going to have to be selling a call spread way out of the money here and a put spread way out of the money down here. And the problem is you don't get paid very well. So you take an inordinate amount of risk for not much reward. Now, obviously, depends on the stock, depends on everything, right? If you wanted to risk a call credit spread, if you look at a Condor, it's just a call credit spread on one side and a put credit spread on the other side. Would you be willing to put a call credit spread onto Tesla here? No, I'm not. So why would you do a Condor here? If you're not willing to do each of those legs individually, don't do a Condor. That's the way I teach it, because a Condor, the price needs to stay in the range. Now, if I was going to do something on Tesla, there's the top of the volatility range. I would need to take the top of the volatility range and then go further to build in security on the trade. So if I start selling the 1280, now it comes down to what is the expiration date. If I go far out in time, you think Tesla can't get here in a week? Tesla could get there in 3 days. You know, it's just one of those things. So there's a lot of complexity to it. What would be the safer trade? Does this look like a stock that's going to fall down to here? Does this look like it's going to fall down? No. Take your volatility range, sell a put spread down here for next week. You should be out of it within 3 to 4 days. Done. You know, that's a much safer trade than trying to determine how high could it go minus whatever, you know, or could it get there? I know it couldn't. I know it can get there. It's far more likely to get there than it is to get there. So you work out which way you want to trade and then just trade the side of the Condor. So if my tool tells me to sell a Condor, I'll sell the side that lines up with the volatility band. So I try not to sell call credit spreads in bullish markets. That's a crazy idea. You know, and the market is designed to go up. So if you're following the bias rule around volatility bands, just stick with the put spreads. And there are so many opportunities, so many here on Tesla, using the 1 hour chart, there's your levels, tells you exactly what to do. You know, you don't argue with it. This is how it works. And you can go down here, Costco. Yeah, you're below the levels, right? So you're below the levels, you can't do a put spread here. It's a red volatility band. So it's a gray one. So it's the red. It's telling me to sell call credit spreads on the hourly chart. But in the day chart, it's telling me to sell puts. Now I've got conflict between the hourly and the daily. I'm not going to do anything. I want them to always say the same thing. If they're saying the same thing, I can trade it. So Costco, I'm just waiting to see what happens. Lockheed, yeah, red volatility band, bullish trade. Where's the price going to go next? It's going to go here. Can I trade that? Yes. Once the squeeze starts to fire, once this goes green, once that goes green. So I'm just watching this, waiting for a setup. You know, here, Valero, we got out of a trade here yesterday. We won some money here yesterday. Now, if you look at it, top of the volatility range, there's your support level. I can sell puts. I've already got puts. I've got a short call. I've got a short trigger here on the squeeze tool. It's underneath my levels. So I need to wait for this to close above the 21. I need the price above the 21, which it will be this morning. If you look at the pre-market, it's opening above the 21. There's the 21, this line. It's going to open above the 21. Then I can sell my put around about 10:30. So at 10:30, I can add the trade, but I need the price above the 21 to do that. Squeeze losing a little bit of momentum, strong volume, stochastic is strong, although that's an overbought signal. So we have to be a little careful and not be surprised if this falls down. It could fall down to the 21. If this came back to the 21, that would be a fairly significant pullback, but it's a double green. So what's the rule? If it falls back to the 21 in a double green, it's an adding opportunity. So, you know, we could look to either do the trade down there. I'm just letting it play around a little bit. We got out of it yesterday for a win. Don't run back into it immediately. Wait for the setup to start again, and you can go in. If I look at the current book, I'll show you one trade. So SGLY was a trade we did in, I put this in here because this is just ridiculous. I don't know if you can see it, but this is up 17,000% now. You know, this is a trade that we started back in January, back over here in this compression zone. I bought a couple of long options.
Which ticker is
And
that?
what's SGLY?
SGLY.
Yeah, in fact, it actually came from our friend Corey Snyder, who gave me the ticker back in January.
Yeah.
We were having a chat about it. He bought some shares. I bought the option. So shout out to him. If you're looking for any good stuff on some, stocks like this, Corey's the guy. He's got an amazing ability to pick, I call them toilet stocks. And we often joke when we talk about it, but he pulls up some very good things. Awesome guy. This stock, I did the option on it. Now, what's interesting about this trade is it's no longer just a single long call option. All right, so we've already taken around 400% on the one half of the trade. So you buy two options. We bought two options here on that signal. We held on to it. We didn't exit there. We just held on to it. It's as long as it's above the 21, trending strongly. We went through a little bit of a pullback here. That's fine. We can handle that. And we carried on holding it. Now we've got a divergent low bar. Okay, so divergent low bar means higher prices. So we're going to, we want to be above this red zone. Once we get above this red zone, we're moving up to the gray zone. So from here, we're going to go here. The long call option that we have in the book is already up. I'll open it up here. So let me drag this over. Give me a sec. So here is the trade. There, singularity, right? So up 16,900%. We have a couple. Here's another one that's a 10x. There's an almost, this one's up much more than that. We've been trading this for a long time. But anyway, singularity, right? So this trade up 420%. We've already taken one option off at 350% profit. We're done. I've still got 290 days on this option to buy this stock for $2.50. All right, so I can just exercise this option, take the shares. Why would I do that? Well, I'm not going to do it until the delta is at 1, right? So when the delta is at 1, it's the same thing as me owning shares. I can eliminate the theta risk, which is 16 cents a day, not an issue. What you do is you take that option. This has cost me $240, and now I've sold a put credit spread for 80 cents, 78 cents, right? My option cost me $240. I received 1.52 minus 0.7, 1.52 minus 0.7. I got 82 cents for my option. Times that by 300. So I received $246 as a credit against the cost of 240. So this deal, this whole trade cost me minus $6. So because it cost me minus $6, this number is off the chain. It's like, it suddenly becomes this, whoa, and this is the thing. I was talking about this yesterday in the webinar that we did yesterday afternoon. Don't be fooled. This looks really cool. Like someone would say, my God, 16 times your money. How much did you put in? Well, I didn't put in anything. In fact, I got paid to do the trade. So don't be fooled if you're out there. If these things are impressive, it's just about math. And 90% of your success in options trading is going to be about your understanding of math as opposed to anything else. So yeah, it sounds cool and it looks attractive, but once you dig into it, it's like I could easily just close that put spread today and drop that number back down to 400%. So I didn't make 16,000 times my money. Please don't. I'm not driving a Bentley yet. But that's how you would trade it, right? You want to make sure that you increase your effectiveness as a trader. So always look at opportunities to finance your book using credit spreads if you've gone long on the long call side. I mean, this alone for some people could be life-changing. If you're losing money on long calls, this is the way to fix your trades, right? But make sure you've got your setup green, green, green. And
so you want to make sure though that because you're adding risk with another trade on that. So if
you're swapping risk, yeah, you're swapping it. You're basically creating book risk. I've taken away that erosion risk on the long call by getting the credit, right? So as long as the stock continues to move up, that long call option is going to increase in value, that put spread drops in value, I take the profit and I minimize my actual capital that I've used in the trade. My book risk is only on the credit spread. And my book risk also reduces as the price moves further and further away from the short strike. So you don't, I wouldn't say you reduce your risk. You're reducing the usage of your capital, but you're increasing the book risk on the other side. So that, again, it comes down to maybe we're splitting hairs, but the thing at the end of the day is trading is about developing efficient systems. You have to have an efficient system, right? So when you've got long call option, green trend, trading strongly, signals, those signals are supposed to trigger some action, right? They trigger something, right? So if your entire trading strategy is, I only do trade strategy A, okay, well, you shouldn't then get FOMO when someone does trade strategy B and beats the, the pants off you. Don't get FOMO on that. What you should do as a trader is look to increase your trading skill set by adding those trade types at certain triggers. So if you don't have certain triggers, if you don't have a tool that tells you, okay, time to do this, or okay, time to do that, what you're going to be doing is randomly adding stuff into your book that may be the worst time, the worst strategy for that stock. Everything might just be the worst, right? You lose. Your mindset, once you've lost on that basis, because you didn't have a system to follow, is I'm a bad trader. Okay, because now you're looking at the result of the trade and you are identifying based on that, right? I'm a bad trader, I lost money. How do you know you're a bad trader? And how do you know if you just did the wrong trade at the wrong time? That doesn't make you a bad trader. That just makes you unsystemic, right? You just didn't have a trigger system. You might be a brilliant trader. I know a lot of clients that are phenomenal at managing the exit of a trade. They can take a really bad trade and not lose a lot of money. I know a lot of people that can take a good trade and mess it up completely. The trade is separate from the trader. You have to make that distinction. A lot of people don't. And they land up trading to their own self-belief. And that's the biggest psychological problem that traders have is, oh, I lost money, I'm bad. No, you just had a bad setup. Let's fix the setup and not talk bad about ourselves. Don't identify based on your result. Identify on your ability to follow rules. If you don't follow your rules and you lose money, it doesn't make you a bad trader. It just makes you ill-disciplined. And that you can fix. But if you're a complete jackass and you just throw crap on your book and you lose money, you're not trading in the first place. You're gambling. And that's what we want to try and avoid. So tools are really important. The way that I've built the system is to eliminate the indecision that comes from the greed demon and the fear demon that sit on your shoulders. So if your system of analytics can be the same, consistent all the time, no emotion, no bias, it just looks at what is, as opposed to what you think should be. Because that's also another big problem for traders is they try and force their bias into a trade and then they lose. Then they go back and say, oh, my analysis was wrong. No, what you should have done is not taken your analysis from that level of conviction and thrown it onto a trade and told the trade to do it. The trade doesn't care what you think. Trade doesn't care what you think. The trade's going to do what it's going to do. So, a lot of people, when it says the stock, the S&P must go to this level. No, it doesn't. It doesn't care what you think. And if your analytics and
Chris,
trading,
this is my quick personality test for you. Okay.
Yeah.
I know that you have like a lot of emotional control having done this for a long time, but
yeah,
is your fear demon or your greed demon louder?
It depends on the mood of my wife. If that is truthful,
I'm just wondering if that would tend to me to see like whether people tend to be more aggressive or more conservative. Are they more concerned with losing money or more concerned with gaining money?
I'm not afraid to lose. I've lost money before, so the fear factor of losing money, no, I'm not scared to trade. But what I do to keep both in check is I don't size my positions any different. Every single trade I start is the same. I don't care if it's Tesla, Google, Amazon, whatever. I always start the same way. And as a trade earns the respect, remember this, a trade needs to earn its way, right? So as the trade starts to improve and it starts developing, then I can add more to it. But I will never take a setup, regardless of how good it is, and bet the mortgage payment on it. No, I don't do that. You know, it's just, that's stupid trading. That's not even trading. That's greed. Greed kills. You know, Gordon Gekko said greed is good, but it's good in some context. It's not good in the sense of, you know, let me take my son's school payment and you know, throw it on some garbage stock and hope for the best, right? Like AMC.
Ambition is good, and greed is a different kind of.
Yeah. So what is your objective when you trade? Your objective is to develop a business that's going to be consistent over a period of time, right? So how are you going to do that if every time you get a trigger, you're going to act differently? How do you develop consistency in that form? I'll show you in my trade book from last week. You'll see the sizes of positions, right? Let me open up this trade. Here we go. Let me get rid of that. Open up this. So here, okay, let's open this up for. So this is the P&L for this week so far. These are all trades that we've done. So if you look at the green, notice the size of the green. The average size is small. I trade in frequency as opposed to size. So some traders would look at me and say, oh, you trade too much. Well, it works for me. I'm comfortable trading this level of volume as well as this size of transaction. So for us, the book already this week, we've already made $2,000 for the week. Our goal is 2.5. We hit it on one day. Okay, we can go home now. We can finish. We can take the week off.
There's some people who trade more size and less volume then.
Yeah. They might also not have a high win rate, right? So if you don't have a high win rate and you're trading big, then you're going to have a problem. If you look last week, our email clients managed to make around 3,000. Let's see. Yeah, 3,000. They made 3,000 for the week. They only had 3 losers. So when you have a client that's making, their goal is, you know, $1,000 a week or $2,000 a week, they hit their number. Let's look at the week before, March 25th. They made 3,700. You know, and this is across a variety of trades. 2 losers. You know, they had a win rate of 82%. If you're building a consistent business, this is the only way you can do it. You can't do it any other way. I mean, if you can find a better way, by all means, I'm ears. But this took me 20 years to get to this level of, you know, win rate, level of consistency. Let's look at March 18. You know, clients made $5,000. You know, 5 losers. They had a win rate of 72%. It's to get to this level of consistency, you have to have tools. Those tools are 90% of why I can be successful. They're not, I'm not successful because I've been trading for 20 years. You know, I had many years where I didn't do well because I was trying to get to this level of consistency. And it's only through the analysis of your own trades and, you know, what went wrong that you'll work this out. And many people are too arrogant to think that other people's learnings aren't for them, right? So my job is, if I can help someone avoid the learns that I had to go through. You know, I went through the ringer, man. You know, so many people start trading. Your first year is great. Oh, this is fantastic. And then you have a winning formula, and then you go to read another book, and then you take something from that book, and then you've adjusted your winning formula. And all of a sudden, you're so far removed from your winning formula that you start to lose. And now you can't get back to that winning formula. So, you know, I try and show people, like, look, if someone comes to me and says, I want to make $5,000 a week and I've got $10,000 of capital, it's probably not going to work. You know, it's probably not going to work. But if you come to me and say, look, I'm going to use, you know, $2,500, you've seen it in our quick hits. We started off with $2,500 a month ago. We're now sitting at $3,200. Our goal with that is to take it to $10,000, take out the profits, go buy something else and start all over again. And if we can do that 3 or 4 times in a year, you know, you're making $20,000 a year off $2,500 of capital. That's a pretty good return. But most people don't want to do it. Or most people, when they hear about high win rates and successes and real numbers, everyone's got such a skepticism about this, because in the sort of general conversation piece, most people are either driving Bentleys or living on Skid Row. There's no middle ground in trading. You don't find the guy who constantly makes $5,000 a month or $5,000 a week or whatever it is, sitting on Instagram telling you guys this is how to do it. Those are guys who are not going to be driving Bentleys. They're not going to be flying around in rented jets. Those are the guys that are going to be sitting there each week doing what they need to do, right? And there are guys out there. I know a lot of traders that do much better than what these other clowns on, the internet are promoting in terms of their strategy. But there's a whole lot of stuff that works that most people aren't even aware of. So hopefully, if you're out there and you're watching this and you're interested in trying to build a business out of your trading, get in touch with us and, in the comments or whatever, and, let us help you, because this is the whole idea of trading is, how do I take this from being a hobby and make it a business that works? That's the key. And if it works for me and it works for my clients, it can work for anyone. But you've got to go through and do the work. Everyone looks for the hack, the simple solution, I don't want to do this for, more than 10 minutes a day. Well, let me tell you something, you're going to have to. And until you change your mind, it's not going to work. You're going to, you never see amateurs winning Grand Slam tennis tournaments. A hobbyist in jiu-jitsu is not going to win the ADCC, or, they're not going to win the IBJJF Pro. It's not going to happen. You put in the time, you put in the effort, your results will come. If you don't want to do it, then don't expect the results. If you're trying to find the Holy Grail that gives you the results without the work, let me know when you find it, because I've been searching for 20 years and maybe my GPS is off, but, help me, let me know if I've got it wrong. But this is the way I try and teach my clients: plan, prepare, execute. This is more than just the trades. It's more than that. This is easy to do. Do this trade, make this money. Easy. I'll tell you now, the trade part is the easy part. I'm giving my clients 150 trades a month. We win 80% of the time. That's easy. What's hard is managing what goes on inside of your head, and not letting one good week like that suddenly say, you know what, let's size this to the gills. And then the next week you lose 10 grand. That's not the point. The point is, every week we try and maintain a degree of consistency. This is our plan for the week. All the blue trades are already done. We just need to close them off. And, if everything works according to plan, another $5,000 week. And, it's about that consistency that you want to teach. I want to teach people how to do that, because it's not difficult. I don't try and hit the ball out of the park. Yeah, obviously there are going to be some of these trades that are going to be big, but that's not the bulk of the money that's made here. The bulk of the money here is on quick trades. They're all based off systems, all based off these tools. So if I give you the tool, I give you the process, the only commitment someone else has to make is the time. If you put in the time, you get the result. It's that simple. So hopefully this helps people frame their expectations when it comes to their own trading. Don't let my numbers be a distraction. Rather look at what your numbers are. What is your goal? We start off, with my clients, I always say to them, start with $300. If you can show me you can make $300 in 2 weeks, next week we're going to do 500. And then once we've done 500, we're going to do 700. Then once you've done 7, we do 1,000. And within 6 weeks, you should be sitting at $1,000 a week, every single week, like clockwork. And then you can scale up. We can start scaling up. We can add an extra tool to add another strategy. You can have 4 or 5 strategies that work consistently. That's how you build a business. You're not going to build a business hanging around in a Discord server, listening to people who are losing money hand over fist. No one ever tells you they lose money. Like, that's the thing. No one's going to go, hey guys, except if you're on Wall Street Bets. If you're on Wall Street Bets, you're going to hear about those guys. But no one's going to tell you, oh, look how bad I am. So be careful. It's all about being careful and, setting yourself up to win. You cannot win this game unless you have an edge. If your edge is the same as 75,000 other traders who all do the same thing, you have no edge. You have no edge. And if you're not getting an 80% win rate, and if you're not consistent, put your name in the comments box. let us get in touch with you. You get in touch with us, whichever way, and we can help you out. But that's the important stuff.
Sounds good, Chris. Well, I'm going to let you get to your day, man. I appreciate the information. Everybody out there, Rogue Investing /alpha. Sorry. It's not enough coffee yet, but we'll do this again next week.
Yeah, look forward to seeing you, buddy. Take it easy.
All right, take care, Chris. Glad you're
Cheers,
feeling
guys. See you. Bye.